We all expected real GDP in the second half of 2017 to decrease because of the OPEC production cuts. The critical part of the puzzle, of course, will be whether those production cuts are actually extended into 2018, from March of 2018. Currently, where we stand, what we're faced with, actually by historical standards, OPEC has done a very good job. If you look on average between January and August, OPEC has met 86% of its pledged production cuts. So by historical standards, that's actually a big win. What's interesting is if you look at the data for July and August, that slips to 79% relative to 100% back in January, February. So you could read that as the resolve is slowly starting to slip. There's a danger there that that would delay the rebalancing of the oil market. And that's a big worry for all of our members, because we've seen what kind of an impact that can have on overall growth. In my personal view, and these things are very difficult to predict, I think pragmatism is going to rule the roost. What you'll see is, if you listen to the signals coming out of Riyadh and even out of Moscow, it appears at this very early stage that there is an appetite to perhaps extend the production cuts. If you look at things from Saudi's point of view, obviously everyone wants higher oil prices for higher oil receipts, but at the same time, there's another reason, and that would be that they want to bolster the valuation of the Aramco IPO, which potentially could take place in 2018, maybe 2019, if you believe some of the rumors. So there's an added incentive for them to make sure the oil price remains this kind of a gradual recovery is what we're seeing. Of course, there's going to be a lot of volatility. We can't discount big global geopolitical issues that could potentially have an impact on the oil price. However, if we see pragmatism ruling the roost, as I say, you see the oil price slowly continuing to recover. You see the break-even prices for the governments decreasing. You see they're making more progress on their budget deficits, the reforms they've introduced, the revenue diversification, the implementation of taxes. All of this starts to bring the government into a better position. These are government-led economies. Sooner or later, the governments start to ease up. There's an increase in projects, and the growth comes along with that. So I think 2018, critical markets, I think Saudi, slight recovery. I think the indicators, if you look at what's happening in Egypt at this very early stage, I think while Egypt still faces significant challenges and significant pressure for our members, there is a sense that the indicators are beginning to point in the right direction. I think UAE will probably outperform most markets, driven primarily by what's happening in Dubai with non-oil growth associated with an uptick in projects from the Expo. Qatar will try to stimulate its economy, has a lot of projects coming online. It has deep pockets to be able to do that, but it faces its own challenges, not least the boycott itself. So we're seeing a slow, gradual recovery. Companies realigning their operational strategy to this, I wouldn't say a new reality, but a little bit more optimism for next year.